My name's Dave Levine. I'm with the Corum Group. I'm an SVP there. And I'm actually, interestingly enough, based in Vancouver, Canada. So you probably won't find me next Wednesday. I don't know. I'll be hanging out somewhere. But I'm very excited to be here today to talk about M&A and tech. And Corum, I don't know if you might not know about us, but we are leaders in software and tech M&A on the investment banking side. We do a lot of work on research, education, and valuation. Those are our underpinnings. If you take a look at our website, you'll see we write quite a bit about M&A and really helping CEOs and founders think about how do they build their playbook. And so whether you're interested in exiting next month, in a year, or 10 years, really start to think about how you build your playbook. We think about M&A from the standpoint of what is an optimal outcome. Right? What does that look like? How do you achieve that in your business? And so I think what's great about this talk is that whether you're in cannabis, whether you're in cannabis tech or some other field, it's germane, right? And this will give you a lot of ideas to think about, how do you really scale your business? How do you grow your business? We've sold more software technology companies than anybody. We've been around for about 30 years, so sold over 350 companies. So we bring these ideas to you from that perspective, that how can we share what we've learned in the market, what we've seen, what's going on. And we thought it was really interesting to be invited to come here to speak. Prior to Corum, I was CEO of an e-commerce and logistics company. Ran a fund where we were investing in counterintelligence, e-commerce, logistics, and healthcare. Sold a company in the healthcare space, and on the board of some private and public companies. Have done some work in the monitoring of exhaled breath for picking up organic compounds, including THC, and then also last mile logistics for delivery of cannabis. So I'm going to talk today about a few key areas that I think will be really interesting. First, of course, what are the tech trends that we're seeing in the market right now? How should you be thinking about valuations? What are a few notable deals? We'll talk about some M&A challenges, give you some ideas there. And then what does an optimal outcome actually look like? How many of you here are CEOs of your business? Okay, so we got a couple. How many are investors? Okay, great. So you'll see, these are, this is, as I said before, this is about helping you with the playbook so that you can really think about, okay, what should we do here? What are we going to do with this company? How do we get it to the next level? Because it's hard work. I'm going to touch on a couple of transactions that we've done because I think that they're instructive. We sold a company to Bosch. Bosch is, of course, a company that has a lot of things, whether it's in the home or industrial. And so Bosch said, hey, we want to buy something that allows us to connect everything. And so they bought an IoT company. What was interesting is that they were actually the highest bidder. They outbid all the other strategics. And this is instructive because you're going to start to see companies that come into a market to really establish a foothold, to make a play. We saw Google, they bought a company from us called Installations. They bought the company and then made it free. Decimated the market overnight. Right? So these markets move really fast. We sold a large gaming company to a Chinese chicken parts manufacturer. And the point here is that the money is everywhere, right? And you have to find it. And this was a deal that we set up on Hong Kong Stock Exchange. And so, buyers are everywhere, and you need to be thinking about them from that perspective. And then, of course, we sold a company to Brother. I'm sure you're familiar with Brother. They do, of course, sewing machines and printers, and they realized that they needed to diversify, right? Just selling in the printer space was very dangerous for them. Look what's happening to companies like GE. So they bought a high-definition video company from us. So as we think about the market, we think about, what are the important trends that are actually driving the markets? And so we're in this interesting spot that through our engagements, through our research, and through talking to buyers, we actually think about, what are the top 10 disruptive trends that are actually going to be shaping the market going forward? And so every year we publish these, and these are actually, as I was thinking about this talk and looking at what's going on in this market, all this really applies to what's going on in the cannabis sector as well. But these are the top trends that, as we talk to CEOs, we invite them to think about from the perspective, where are you going to steer your business, right? Where is the investment going to be made? And so artificial intelligence, composite commerce, IoT software, digital currency flow, data science monetization, focused IT services, smart logistics, connected health, regulatory systems, and data security. And these are the big areas that we're seeing a lot of movement in. And as you're building your business, as you're thinking about, maybe you're thinking about a pivot or where to invest, you'll see as I share some data, the type of investments that are going on in each of these sectors. And they're relevant to cannabis as well. So as we think about artificial intelligence, what's interesting here is that in the last 12 months, there's been over 120 deals where artificial intelligence was part of the thesis. There's been over $15 billion that's been put into the space over the last few years. So a lot of investment that's going on here. And of course, you're starting to see it show up more and more in the mainstream media. Findify, that's a company that was acquired by Namaste in the space, and they're doing machine learning. So we're seeing these types of acquisitions in the sector, and it's important to pay attention to them. I mean, look, voice assistants, I mean, those are table stakes right now. And, I think about examples that are relevant. You have the situation where a boy in the UK phoned 911 by using Siri to phone the paramedics to save his mom's life. Right? Artificial intelligence is the new electricity. And you need to really be thinking carefully about it in terms of how it applies to your business. Google has published over 200 papers covering artificial intelligence over the last 12 months. So a lot going on there. Composite commerce, we're seeing moves, of course, in the space as well, specifically in cannabis. This is where, think about how commerce has changed. We want what we want, when we want, how we want. That's just the way it goes. We're able to push a button and get exactly what we need. And so there's a lot of systems that drive all of that, and this is definitely showing up in the e-commerce of cannabis, for example, as we look at seed-to-sale companies. Americans are spending about 10% of their income on e-commerce. Chinese consumers spend about 20%. How about the fact that you can now have your groceries delivered to 7 million GM cars from Amazon, right? Because they have access to your trunk. And they bought a doorbell company for over $1 billion. So once again, a really important trend that we're spending a lot of time in. IoT software. So, just taking a quick look at the cannabis space, we saw there's over 10 companies that are in the grow tech space that are using some form of IoT, so companies like Optileaf. There's been over 200 deals here in the last 12 months. And really, there's no such thing as a digital company anymore, right? All companies are digital companies. Everything around us is being connected to find some way to be optimized. Every week, you hear a new statistic about the number of things that are connected to the internet. And so, whether it's 10 billion, 20 billion, but it's just very common right now that things that are around us are going to be connected. The market is moving fast here, right? There's been over $2 billion of funding in the space in the last year. And so the big players are placing their bets. So I'm really interested to see what happens in the cannabis sector here. On the digital currency side, so this is an area about frictionless commerce. And we're continuing to see the movement of currency. I mean, there's Bitcoin and there's cryptocurrencies, all these things that are shaping the market. So now there's companies that allow you to take out Bitcoin, ATMs at cannabis shops. We've seen companies there. So a lot is happening in this particular sector. And once again, the consumer is able to buy things in multiple ways that we believe is driving, will have a big impact on the market. What do you do with all the data science? What do you do with all the data, excuse me? I mean, there's so much data that's sitting out there. And here we're seeing over almost a dozen companies that are in the cannabis space that are looking at ways to monetize the data. There's been over 70 transactions in the last 12 months. But how data is being used to drive your business or business in general is changing. And active in the gaming industry, for example, are these media companies or are they analytics companies as you really think about the data? And looking at the companies that have been speaking here today about data, I mean, clearly this is something that is going to be an important asset. But as you think about your businesses, you have to be thinking about it from the optics of what can I do with all my data? What am I going to do with this? There's a lot of value that's in your data. So be thinking about it from that perspective in terms of what type of information you can glean from that. We saw in the focused IT space, we saw in Genie, they were acquired by Helix. This was a company in the marketing services space. So definitely seeing some focused IT services. IT services companies, generally are not valued as high as other tech companies. So we're seeing specialization in the space. We're seeing companies that are specializing in artificial intelligence or augmented reality to really try to drive additional value for the business. And so just being an IT services company, yeah, you're going to have a challenging time if you think you're going to get an exit. That might be interesting. Smart logistics. So really, the commerce and logistics are converging. And this is a game that's being won by the companies that just simply know how to get goods to their customers as fast as possible. And we're seeing massive moves here. In the ag tech space, we're seeing companies like Trimble that have done some acquisitions. We're seeing Walmart and Target fighting over the last mile. So you've seen a lot of work there. Target made a couple of very high valued acquisitions for a company like companies Grand Junction and Shipt. So this whole supply chain is looking for ways to be optimized. Trimble acquired a company called 10-4 Systems in the space. So as we look at these markets, not only do we look at the valuations, but we also look at what's the velocity, right? How many companies are being acquired here over a given period of time, and what are the big trend lines? So this is an area where we see a lot of opportunity as well. Connected health. And we could spend a whole day talking about connected health. There's been almost 550 transactions over the last 24 months. 75 were population health, and patient readmission was part of the thesis. You know, obviously we're starting to see things happening here in the cannabis space. You know, a lot of talk today about CBD, and I just read recently Coke is looking at using CBD in their drinks. Epidiolex, of course, that's one of the first, or the first drug that was approved by the FDA. What's interesting there is that was approved for the treatment of two rare forms of epilepsy. And one of the forms, there had never been a treatment before, right? So if you think about the brilliance of that, right? So really finding these niches that maybe nobody else has exploited. And you have to be thinking about your business in that way. Because when you build your business today, if you're not thinking about it from the standpoint that you want to sell it one day, I think it's very dangerous. I think that this is a game of grow fast or die slow. And I'm hearing it over and over today as I listen to some of the talks where, you know, consolidation and the speed that the market is moving. This market's pretty complex, right? Because it's moving really fast. And the way that the markets are moving is compressing in terms of how they mature. So we're actually seeing that consolidation happen while the market is still being developed, which is pretty interesting. On the regulatory side, we've identified around 13 companies on the reg tech side, companies such as Trellis and WeTrack. But this is really about technology that's advancing how companies are managing the regulatory compliance. And look, this is now mission critical for banks and financial institutions. And you know, these institutions, these enterprises are looking for ways to work faster, work smarter, take costs out of the system. And so not only do we have those forces that are driving this, we also have national or political things such as GDPR and Brexit, and of course the US political situation that are really having a big impact on, you know, how do these companies get at the data faster. And so we're definitely seeing a lot of activity in the reg tech space. We've seen IBM do a recent acquisition here. We've seen some of the stock exchanges that are actually buying companies for behavioral analytics again. So once again, you see that theme of artificial intelligence, behavioral, semantics, all these things are coming into play as companies are looking for ways to continue to stay relevant, ways to drive value for their business. Of course, data security. So, you know, on the one hand, we have ransomware and WikiLeaks. I just saw a statistic that 4.5 billion records were breached in the first half of 2018. It's incredible, right? And we see obviously what the media is doing with the election and Facebook and things like that. But these are real problems that companies don't even know how to solve right now. You know, Google announced that they're shutting down Google Plus because of a breach, right? And so how do you protect all this data? How do you protect your systems from these breaches? And so the acquisitions that we're seeing here are around predictive analytics and software-defined perimeters, and these are very rapidly evolving areas. If you take a look at some of the large players in the space, we see Amazon and HP and Sophos. They all acquired companies, and they had a machine learning and behavioral component to those acquisitions. We saw that security-grade protective services was acquired by Helix. So another interesting thing here is that We have physical security combining with digital security. ADT made an acquisition in the security sector as well on the cyber side. So, once again, as you're looking at your business, looking at your markets that you're playing in, you have to be keeping all these things in mind, because if you don't, you could wake up one day and realize that the market has shifted below you. You didn't even realize it. I mean, of course, you're focused on growing your business, right? That's what you're supposed to be doing as a CEO or as an investor, maybe guiding a company. But you really have to be paying attention to these big trends, because you could wake up in a dangerous situation. What's interesting is that, again, we're seeing these acquisitions in the cannabis sector actually line up with these trends. But we also know that the companies that are playing on these trends are the ones that are getting higher valuations. And so positioning your company along these trend lines and understanding the trend lines is just something that I invite you to do. It's hard to do, right? It's really hard to stay on top of all this. But what's interesting here is that a lot of the acquisitions fall right into these areas, which I think is what we would have expected, but now it's actually showing up in the data. So thinking about ag tech as a whole, you can see that there's massive disruption that's happening in the way that the farm is going to be managed going forward. And so there's companies that are coming up with technologies around robotics and drones and sensors. The type of information that we're seeing around sensor technology is incredible. The data that farmers are going to have to understand what's happening with their crops, whether it's on the photonic side or the amount of water that their crops need, it's going to be dramatic. It's going to have a significant impact. And so, this whole industry is going to be turned upside down right before our eyes. And of course, cannabis is a component of that. So I just sold a company in the ag tech space in the summer, and it was all about consolidation and scale. What's interesting right now is that if we look at the macro conditions in the market, there's about $1 trillion sitting around on the balance sheets of strategic buyers. More interesting is that there's $3 trillion on the PE side. And the PE firms have changed the market. And the reason that this is happening is that these firms are built to buy companies. And as we take a closer look at who some of the top strategic buyers are, you have Constellation, which is a Canadian company. And then a lot of these companies you probably know, Microsoft and WPP, Deloitte, Google, of course, Alphabet, Alibaba. But you can see here that these companies are buying up companies at a rapid pace. Of course, Google is an amalgamation of probably over 200 acquisitions, right? But they're doing this to survive, right? They're doing this to stay relevant. We also believe that companies such as Constellation, such as WiseTech, such as Alphabet, these are the companies that we believe will start to move into the cannabis sector. But here's what's happening from the PE firms, as you can see. The PE firms are more active than the strategics. And what the PE firms are doing is they're going into a sector and they're rolling it up. And they are very aggressive. So you can see the most acquisitions in the tech space was done by Vista Equity down out of Austin. But they're building out these portfolio companies and then adding tuck-ins on it on a feverish pace. And so, there's some PE firms that are showing up in cannabis. You have Merida and Privateer and Saruya. But definitely pay attention to these PE firms. They're interesting. In talking to CEOs, a lot of the CEOs say, I don't want to deal with the PE firm. They're too financially oriented. But a lot of times you can have a second bite at the apple with the PE firm. So in other words, you could, I hear a lot of people talking about venture capital money and using that for scaling, but think about the PE firms for scaling as well. And this is a case where you could sell a majority of your business in, let's say, 70% and still maintain 30% of the equity going forward and maybe get another bite at the apple. So pay very special attention. I'm sure the CEOs in the room, you're going to start to have, as this market evolves, you're going to start to have PE firms reach out to you and ask if you are interested in talking about selling your company. Talk to them. Because generally speaking, they know a lot about the market. As we think about software and technology, we group them into these main sectors. So we have horizontal software and vertical and consumer and internet infrastructure and IT services. And we talk about this quite a bit in terms of what's happening in these individual sectors. So this morning we had our monthly webinar where we talked about different trends that are happening. And by the way, on that note, I invite you to take a look at our website. You know, I talked about education early on. I mean, we publish a lot of material to really help CEOs think about what to do next. So go check out the blogs. And we also run webinars, so just go ahead and check those out. They're free, and they're just packed with so much information. But what we talk about is, okay, what's going on at the public companies, right? And I've heard discussion today about the public companies and how they're valued incredibly high. Now, what you're seeing here is that as we start to slice and dice these markets and make cohorts, we begin to see interesting data that allows us to think about companies or allows CEOs to think about their companies in terms of what's my company actually worth. Now, valuation in its own right is an interesting exercise, right? But this type of data will allow you to start to think about your business from the perspective, okay, I have a company that's in the ERP sector in the cannabis space. What are publicly traded ERP companies selling for? And so you can see that today they're trading at around 5 times revenue, or 19 times EBITDA. But so as you begin to think about your business, think about it in this context. John Deere, for example, they acquired Blue River for $305 million. Earthcast, they acquired Geosys for $20 million. That was a company in the crop and ag software space. But Earthcast is a visualization company. Right? So, start to look at this data and really begin to think about how does your company fit in. If we go to the vertical side, here, if you're a company in the architecture, engineering, and construction space, you can see that, the trading of the company on public markets, you can see that it's at, close to 10x. But if you were a company in the government sector, those companies are trading around 2.5x. And so this is important as you think about, where do you hunt, right? Where do you start your business? I mean, a lot of people start their business because it's their passion. And I wish every CEO would be thinking about it from these optics. I mean, that's important that you're passionate, you love what you're doing, but if you think about what could happen, what is the end game in mind, you might come up with a different thesis on where to actually put your resources. Right? DuPont acquired Granular for $250 million. That's a company in the farm management and analytics space. Right? So it's a vertically oriented company. So we're thinking about these companies okay, who's in a vertical sector? So you can see these individual sectors and how they play out. RealPage, which is a company that's aggregating companies at a feverish speed in the real estate space. Yeah, is there a play there in cannabis? Possibly. Right? Are these broader real estate companies, are they going to be looking at in the cannabis sector to solve specific problems? We do work in the gaming space. This is really more informational, but you can see, gaming companies are selling currently in the public markets at around 3 to 3.5 times revenue. If we look across the general internet space, Namaste acquired CanMart for $2 million last year. I talked about the Findify deal. That was a $12 million deal, 30 times revenue. Right? And I think what's interesting there is that Findify wasn't specifically a cannabis company. They were an e-commerce and machine learning company, and they just happened to be solving a big pain point probably in the sector to help people choose what they want to buy when they're on a cannabis website. What's interesting here too is if you think about a company like Airbnb, they made an acquisition of a company in the identity space. Well, think about that. That makes a lot of sense, right? Because what's the currency on Airbnb? Trust. So as you're thinking about your company and how you position yourself and where you fit in the broader market, I invite you to really be thinking about it from what's it going to look like from an optics of M&A. Right? What am I going to do with this company X years down the road? On the infrastructure side, we have a METEC. They acquired Motec for $95 million, a company in the ag tech space, or that was about 2 times revenue. But if we look at the general markets and the security side, Palo Alto just paid 45 times revenue for a company that does machine learning around security. So, and I talked about before, there's this convergence of digital security and physical security, and I think that we will definitely see more of that going forward. But again, so if you're a company that's thinking about the infrastructure and security space, you can get a good sense of, okay, here's some data. Evaluation of software and technology companies is a difficult game, and because you're valuing an asset, basically there's nothing on the balance sheet. So how do you value that intangible asset? And so this is a data point. And we talk a lot about that in some of the other courses that we do. But this is one data point. So you can't be thinking that, okay, well, Arista Networks at 5 times revenue, so therefore I am 5 times revenue too, right? I'm not suggesting that by any means. I'm suggesting that you can look at this and say, okay, here's a data point where I can be looking at other companies that are similar to mine in the space to get a sense, right? At the end of the day, the value for your business is going to be driven by a competitive process. Of course, IT services. So if you're building a company in the IT services space, potentially in the cannabis arena, you will see that, okay, here's how these companies are trading. And yeah, their value is not as high as some of these other technology companies. Some ag tech deals that caught my attention, so we have Ag Junction, they bought a couple companies, BASF recently spun out the digital farming division of Bayer, and then Climate Corporation and Team Systems. These companies have done work in the water sector, and then Trimble. This is a multi-billion-dollar public company that's active in farming and positioning. They acquired a precision farming company out of Germany recently as well. We see some of the early movers in the cannabis sector. So Helix obviously has been pretty acquisitive. Namaste Technologies, and then Mass Roots. They bought Waxy. So over the last few years, there's been around 90 transactions that are cannabis or ag tech related from about 75 buyers. And so as we think about that, the numbers look favorable overall. And this is definitely a sector where I think that those numbers will continue to go up and to the right. Some notable deals. So I talked about this deal. This was a $12 million transaction. And the seller was involved in machine learning SaaS. And the rationale for Namaste was around how do I apply that to cannabis commerce. Blue River, they were acquired for $305 million last year. Again, this had a machine learning thesis. I mean, John Deere, they're an equipment company, right? Why would they want to buy a software company? So you really need to understand the trend lines of the buyers in the space. Helix bought BioTrack THC. That was announced earlier in the year. I think this is more about a platform play, right? Single pane of glass. Ag Connections was acquired by Syngenta, and this was a budgeting and crop yield management software. And this is really about how do we tackle the whole farm. These are all companies, though, that I would imagine will work their way into cannabis. Swim acquired On Farm. This was an IoT company, scalable IoT for water. And then Jane out of India. This was a $20 million recent deal, and this was cloud-based irrigation systems. So these are, a snapshot, right? I could talk up here for hours about all the different companies that have been acquired in the space. But again, the point is that, think about your business from these optics. Think about your business from the standpoint, okay, I might sell this one day, right? I mean, maybe not, but I might, and I better be ready. There's a lot of challenges in M&A, right? The process is tougher. It takes more time than people realize. And it's tougher because a lot of times people are going to be using outside professionals. I just closed a transaction in the fintech sector last month, and PwC came in and did the audit. Right? So as a CEO, as an investor, you have to make sure that the business is ready for doing a transaction. And it's not just about a checklist, right? This is a collaborative process. I mean, someone's going to write you hopefully a big check, right? So you have to be aligned with a buyer as well. The other issue that we see, of course, is deal fatigue, right? That's from the time that an LOI is signed. Has anybody here ever received an LOI, offer to buy the business? Yeah. Nothing good happens from the time you receive an LOI until you close, right? And so. So you want to have a cadence on the process. You want to move the process along. It's really important. So obviously there's a lot of issues in this market. It's been openly discussed today, which I think is great. But this whole legalization at a federal and statewide level is obviously a big concern, and it's something that everybody I think here is grappling with. And all of this is going on while the market is consolidating. And then you have this whole north of the border phenomenon where Canadian companies can swoop in and buy U.S. companies. I just saw this week that Walmart has made the conscious decision that they're not going to sell cannabis in Canada. But Shoppers Drug Mart is. Shoppers Drug Mart is owned by Loblaws, one of the oldest retailer in Canada. Right? So really interesting to see how that's going to play out. Is that, okay, well, I'm active in Canada, and now I'm going to look away from what could be a multi-billion-dollar market. Right? Yeah, are there going to be buyers that get cold feet, right? That actually decide not to pull the trigger? We'll give an example here shortly, but that could happen where a buyer's like, okay, we're going to do this, the board's on board. Look, I mean, that deal is not finished until the time you actually receive a wire transfer when it's all closed. Right? And the deal is going to be in place. So the point here is you're thinking about the buyers. You have to make sure that the buyer is actually built, if you were selling your company, actually built to buy a company in the space. And it's a niche market. So there's not a lot of buyers for some of these companies, and the buyers know that, right? So what's a buyer going to do? Are they going to be nice and cuddly about that? Absolutely not. They're going to use it to their advantage to try and drive the price down, right? Of course, on the actual company side of things, there's a lot of things that can happen, and you need to be running a perfect business today. And I say that from the perspective of it's hard work on the CEO to run the company. But we see markets consolidate all the time. I have a client in the security space, and like all my clients, they said, hey, I wish we would have done this 5 years ago, right? Because these markets move so fast, and when you go out to the market to talk to buyers of the business, it's a whole different set of feedback that you're going to get about the company. So understanding that's important. There could be a game-changing paradigm shift in your market that you don't even know about. I gave the example of Google and Instantations. Overnight, the market was wiped out, right? Could it happen here? Maybe. What about the team, right? How's everybody doing? How's the health of the management, right? Is everybody aligned? And this goes to conflict. And I hear people talk about smart money and dumb money and all that stuff. Do you really know what that means? Do you know what it means in the context of when you're going to sell your company? Because that's when it becomes a big deal. So my point here is that as you're thinking about who is going to invest in your company, you have to be thinking about how is this investor going to look at the optics when it's time for me to sell my company? Sometimes I see CEOs get scared and afraid to raise their hand that they want to sell the business because their concern is that the investors are going to think they've given up. Right? So you need to be very careful as you're selecting your investors. So think about that element of when you talk about smart money for investing in your business. Of course, litigation. Things can happen. There could be a patent lawsuit, or there could be other problems. So, these are things that can affect an M&A outcome. And of course, what if something were to happen to you as the CEO, right? Some kind of death or incapacitation. I had a client in the Middle East. They actually weren't a client, and I got an email from the wife on a Sunday. We were getting ready to pitch the CEO on a Monday, and she's like, hey, we need to change that because my husband was diagnosed with brain cancer, and he's out of commission for a couple months, right? But so these things can happen and have a huge impact. I'm selling a company right now, and the majority shareholder has terminal cancer, right? So these things can have a huge impact on the business. And then, this is an example of a deal that actually didn't go through, right? This was a $12 million transaction, and it fell apart. So just because a deal is announced doesn't actually mean it's actually going to get closed. And so this one fell apart. I think that Massroots ended up firing their CEO and caused some problems. So the buyer in this case decided they did not want to move forward, and the seller. So we're on the longest bull run that we've ever been on. And so the point here is that M&A is going to follow a cycle, right? And it's great. I mean, right now, valuations are frothy, right? It's a great time to be in M&A. But the issue here is that when it drops, it's going to be acute. And you need to be ready for that. So as you're building your business, right, what are you wrestling with? How much am I worth? When should I sell? Any CEO is thinking about that, I'm sure, all the time. And so you have to be thinking about that in the context of what are the macro conditions that could have an impact on your business. And so just keep this in mind as you're trying to choose the right time to enter the market. The other thing to think about too, and this is germane, I mean, what is the life cycle of the business? Where exactly is the business at? And Is it a great product? Is it a great technology? Or is it a great business? Right? And you have to be thinking about it from that context, right? So often we see a CEO and like, oh, this is a great technology, it's going to take over the world. Yeah, there might be some buyers for that. And then but you haven't found product market fit. Right now it's all theoretical. And then you have companies that have a great product, but they don't know how to scale. Right? And then of course there's great businesses. But all three of those scenarios can go through these various stages in the life cycle. And that's why you see businesses pivot, businesses fail, go out of business, right? So deciding when to actually sell is extremely important. You need to be looking at a number of factors. It's not easy, but you need to make sure that you think very carefully about what is the right time to sell, or how do I think about selling my business. Some companies, some CEOs think about selling their business as a 3 or 4 year process, right? And we do this. We go out, we get feedback from the market, the company takes that, they adjust their game plan, and then they're able to learn a lot. Right? So as we think about all this, our optics are, okay, what is an optimal outcome? Right? What does that look like? Inherently, after the seduction period, after the buyer tells you how much they love you and they want to sign the LOI, it's war. Right? It's hard work. Because generally speaking, you're going to be diametrically opposed on pretty much everything. And you have to have a good team to help you get through all that. Right? And what's interesting here is that you're negotiating with your future boss. It's very, very complicated. And so all these things are going to be in play, as I mentioned, all the way through the time the deal gets closed. Price, structured liabilities, taxes, non-competes. But the goal is an optimal outcome. And what does that mean? Of course, what's the maximum value I can get for my business? Right? If any of you received an LOI, probably the first thing you look at is what's the price that was in this 10-page document. But more important than price is structure. When do you get paid? How do you get paid? Is it a stock deal? Is it an asset deal? What's the escrow? What's the holdback? All that comes into play when you're negotiating for the sale of your company. So understanding that's critical. How do you minimize your personal risk? Right? If you're going to sell your business, you're probably thinking, okay, I'll be hanging out in the Caribbean. No one will be able to find me. This is great. Or maybe up in Whistler now that cannabis is legal in Canada. But how do you minimize your personal risk? Right? Taxes. Right? How do you minimize taxes so that they're as low as possible, of course, legally? And what about holdbacks, right? So you'll see that in the negotiation of the reps and warranties and the indemnifications. You know, how do you minimize the amount of holdbacks so that, you know, on day one you're walking away with as much cash as possible? And more importantly, what do you want to do after the deal? A buyer is going to ask you, what do you want to do? Usually within the first 15 minutes. What do you want to do, Mr. and Mrs. CEO, if I buy your company, right? And some buyers might want the CEO to stick around. Some buyers might not, right? So you have to figure all that out and make sure that there's alignment on that. Make sure it actually works for you. You have to also make sure that you have proper integration. So, you know, this is about, you know, how do we make sure that this acquisition wins? Over 50% of the time, an acquisition fails to meet the expectations of the buyer or the seller. Right? It's high, right? And it's hard. Right? I mean, usually there's 20 to 200 buyers for a candidate, 700 to 1,000 pieces of communication, 10 to 30 companies are actually interested. Maybe you'll sign 5 to 15 NDAs with somebody, and maybe you get down to 3 to 8 qualified parties, and hopefully 1 to 5 offers. Right? And look, I mean, one of the biggest dangers that we see is that CEOs try to do this themselves. Right? The problem with that, there's a lot of them, but one of them is that the buyer knows you can maybe effectively manage 1 or 2 buyers at a given time. Right? It takes time, too. How long should you be thinking about the timing here? So generally speaking, when people said, okay, I want to sell, what's the timing? 9 to 12 months is what we generally say. I just sold a company in 6 months. Right? They just closed at the end of September, so that can happen, too. And I sold another company this summer that took 14 months. Right? So, but be thinking about that. It's going to take about 12 months to properly run a process. Obviously, the goal is to do it much faster than that. We know that after being around for 30 years and sold over 350 companies, that there's a framework that is effective for getting a company sold. And it involves these 8 steps. So preparation, research, contact, discovery, negotiation, due diligence, closing, and integration. Every engagement goes through that. And as I take a look at the different steps here, you can see that you can start to get a sense of, okay, what do I need to do now, right? And my invitation to all of you is that get started now. And so that does begin with the preparation phase. And I'm not going to go through too much detail here on all of these, but you know, get a data room set up internally and get organized, right? And don't push it off another day, right? Because the probability that someone reaches out to you soon is high right now. going back to my thesis, my slide that I showed on the PE firms. But just get everything ready to go and have a process in place to do that. The other thing that you need to do is properly research all the buyers. And not every buyer is going to be a great fit for your business. What you don't want to do is spend 3 months with the buyer only to find out that the only way they're going to pay for you is with stock, right? I mean, that might not be great for you or for your shareholders. So you need to properly qualify buyers. And you also need to make sure you're positioned properly for each buyer. How you're going to be positioned for a Google is different than the way you'll be positioned for an Amazon, to give an extreme example, right? Then you have to go out and contact all these companies. You put NDAs in place, and then at this phase, you're getting feedback from the buyers. What you thought your company value was going into a process versus once you step into it, I'm pretty sure it'll be different. I'm pretty sure you'll say things like, wow, I think about my business differently, right? And here's the reason why. There's a distinction between selling your product and selling your company as a product. Right? It's two totally different things. And you have to get comfortable with that. Discovery, so this is when the buyers and the sellers are sharing information, meeting, putting NDAs in place. You're finishing due diligence on a buyer. I had a situation come up where the go-to-market strategy that a buyer was going to employ post-close was different than what they told us prior to signing the LOI, right? And so that caused some problems because there was some structure in that particular deal. But the point is that you need to understand what the buyer wants to do with the business after it's sold, right? The negotiation phase, so this is where ideally you're negotiating multiple LOIs, you're putting a no-shop in place. Does everybody here know what a no-shop is? No-shop would be, okay, I won't go out and talk to anybody else while I go under an LOI with you. And there's a lot of negotiation that goes on into that particular paragraph, believe me. But, so, this is intense, right? And I am sure that as CEOs, you're all great negotiators, positive of that. And the beauty of that is that as CEO, you have to have a certain set of chops to actually be a CEO. But there's a distinction between power and force. And I see this show up all the time in negotiations, especially in the LOI. So my point there is that it's hard to do yourself, right? And this is a game of 3D chess. Due diligence, are you ready for due diligence? So Google was going to make an offer on one of my clients, and they realized that the chief technology officer of my client wasn't up to snuff for them, right? Deal done. Right? So the point is that you have to be going in with the optics, and I know it's hard to find good talent, but you have to go in from the optics, well, I need this person to solve this problem for me or be part of my org chart, but how would they look in the optics of M&A, right? What do they look like from a buyer perspective, right? And all that's going to come out in due diligence. I just had a situation where a buyer, the CEO of the buyer wanted to call my client's customers during due diligence. We're like, no, you can't, because the deal hasn't closed yet. Right? But the point is that how you stage due diligence, how you manage all that is critical. And it could be the difference between getting a deal done and not. And then closing. Right? This is where typically the closings always happen where you're about ready to go on vacation and the deal still hasn't been closed, so you're faxing things and PDFing while you're with your family, or it's generally anticlimactic, right? But there's a lot that goes into this that you need to be making sure that you're driving. What does the closing agenda look like? What are the 60 documents that need to be done to get a deal done? Right? Do you know? And by the way, choosing your counsel is one of the most important things that you can do. Your law firm, don't think that if you choose your friend from college that does divorce law that you'll be okay. You won't, I'm sure. So you have to have some, what's that? Right. But the point is that if you choose your buddy or your friend and you think they're going to help you with M&A, choose a firm that does M&A, right? There's the deal I closed in September just made a huge difference to the deal I closed in July. A lot of it had to do with the law firm. Right? And then integration, right? What do you want to do? What does your team want to do? And by the way, think about all of your employee agreements now, because I'm telling you what would happen. It'd be like 48 hours before close. You're about ready to tell all of your employees, and all of a sudden the buyer's going to be like, well, if all your employees don't come, I'm not going to do this deal. Be like, well, but this wasn't a condition in the LOI. Yeah, I'm sorry, that's the way my board wanted it, right? So be thinking about all of your employee agreements, and remember, it will become critical. Because as you work your way down the closing funnel, it gets more and more intense. The decisions become bigger. The probability of falling off becomes higher. Right? So all that being said, we could spend the whole day here talking about, I just want to check the time, talking about war stories, but there's a lot of ways to destroy the value of the business. Confidentiality, of course, is one of them. I have a company that's looking to go out to market, and the COO and the CFO left with all the customers and technology while the CEO is out on sabbatical because his wife had cancer. I'm like, does that really happen today? Yeah, it does, right? So how do you protect all that? So you have to go in thinking that, well, if I lose all this stuff, it's going to destroy my company, right? And that goes to theft of technology, too. Right? So making sure that you have data loss prevention, things like that in place. What about losing staff, right? I had a person, a CEO from Victoria, Canada, call me up and say, yeah, my CTO left because he couldn't handle the startup lifestyle. Wow, right? He's in trouble. Right? And it's hard. How do you have a backup for somebody when you have a small team? What about you? What about the wear on you, right? How do you manage all this? Are you really ready? I mean, you have to bring your A game to M&A, right? Because the people that you're dealing with on the other side of the table, they are, probably some of the smartest people in the world that do this day in and day out. And their job is to put pressure on you to maximize the value for them, which is directly contradictory to you, right? So how do you stay in the game? This is one of the biggest issues that can impact a deal. I had a deal this summer. We got it done, but a week before closing, the buyer said, you're not hitting your forecast, so I'm going to take $1 million of cash off the balance sheet. What? What just happened? Yeah, they didn't hit their forecast, right? So your forecast that you produce to the buyer, what's the buyer going to say? The buyer's going to say, well, look, I based my valuation based upon the spreadsheet that gave me that said that you were going to be $13 million, and now you're only at 11. So my whole valuation thesis was based upon that, Mr. or Mrs. CEO. Therefore, I don't want to pay that same multiple, right? So one of the most important things is to keep your business on track and understand your forecasting, too. We do a selling up, selling out conference, and basically it's a CEO boot camp. It's 4 hours, and we talk a lot about the forecasting and how important it is. So, and then timing, right? Timing is so critical, right? And I wrote a blog post actually called "You Weren't Even on Our Radar," and this is the notion here is that if you're not out in the market, I'm not saying everybody should be out in the market, right? But if you're not on the market, you could miss it, right? And that's what's important. So understanding that, if you want to wait, or if you're a CEO, you have multiple businesses, you're running a lifestyle business, you can wake up one day and lose some customers and be in a serious situation. Right? So you have to be thinking about that, like, okay, what are the trigger points for me to go to market, right? And even if they're wrong, at least you've thought them through, right? So be thinking about that. And then, of course, dealing only with one buyer. Right? What's the buyer going to try and do? Right? They're going to try and lock you up. They're going to say, hey, this needs to be exclusive negotiations. We don't want you talking to others. Why? Right? They want to maximize the value for their shareholders. Right? They want to pay less than true value, actually. That's what they really, really want to do. Right? I just had this situation happen where the buyer has been putting a lot of pressure on my client for about a year, saying, we need to buy you. We want to buy you. We don't want you talking to others. Oh, don't hire a banker. And they want to pay less than true value. And you have to really, really understand the game that's being played here. It's a totally different game. And you have fiduciary responsibility to your shareholders and your stakeholders, right? What are you going to talk to your stakeholders and say, we only got one offer and we took it? How do you know what you're worth? Well, it was a great offer, and I knew it was the best one because my friend down the street got something similar. I just read about that. Maybe not, right? So really, really be thinking about that. That's a big mistake we see CEOs make. And there's a lot of ways to kill deals. I mean, these war stories are great because they really shape what goes on in a process. Dealing with only one buyer. I mean, I think I've made that point very clear. Right? If the shareholders aren't aligned, or the employees aren't aligned, we had an employee that almost took a deal right off the tracks 24 hours before closing, and yeah, you have to make sure everybody's aligned with what your goals are. And so you're going to have some hard conversations. I just had a situation where I had the chairman of the board of a company say, okay, Dave, we're going to go with you. Can you participate in my board meeting, and I'm like, sure, I'm happy to share our views on the market. This was a company that had inbound interest in one of the largest companies in the world, and I got an email from the CEO said, I don't want you in that call, Dave, and I think we're going to market too early. And sure enough, that chairman stepped down, our new chairman came in. Right? So things are going to come up when you start talking M&A. Don't think that because you have a buddy or a friend that's a VP that they're going to help you. If you don't contact these companies at the right level, you could miss your opportunity. Right? And so that's really the point of this. Not understanding the buyers, not understanding why they're buying, how they're buying, that can hurt your valuation. Not understanding the buyer's processes. So often we have situations come up where you want as a hard-charging CEO, you want it to go your way, and if you put too much pressure on a buyer, you could actually kill a deal, right? So the larger, more sophisticated buyers will have a process that they typically like to follow. On the other hand, as you're qualifying buyers, are they a first-time buyer of a business? That's hard work, right? Because a lot of these first-time buyers don't know what they're doing. Right? Do you know how to portray your value properly, right? I had one of the largest companies in the world make an 8-figure offer for one of my clients, and sure enough, another PE firm valued them at 6 times higher than that company, right? And it really came down to how the two companies saw the value of the business, and we could have never predicted that. And so you need to understand how to portray the value of the business. If you're not prepared for due diligence, if you don't have proper metrics, if you're not churning data that the buyer requests, the message that you want to send to the buyer all the way up until the time you close is that there are other people at the table. There are other people at the table. If you don't do this deal, I'm ready to go with somebody else. I hear this. CEO's like, oh, it feels so good. There's a great synergy. We do great whiteboarding together. It's different. It's different when you go to sell your company, when you get involved in due diligence, because things will come up. And if you're not ready, you could kill your deal. Yeah, making sure the buyers are qualified properly. I had a situation this summer where we contractually forced the buyer to put a $3 million deposit on the table because we didn't believe that the buyer actually had the cash to do the deal. Right? So you need to make sure you understand the buyer. And this comes down to asking the right questions, having the right team around you. But Mr. or Mrs. Buyer, why do you want to buy my company? Have you done this before? Can I talk to other people you sold to? Right? And there's a whole series of questions that you need to ask. Right? How do you orchestrate the buyers correctly? Right? You'll start hearing buyers say things like, well, if you don't move forward with my term sheet, we're just going to move on to something else. Well, that's not good. And so fear will probably come over you and say, well, I want to make sure I calibrate my value. But you have to orchestrate all of them, and that's hard to do. Right? Yeah. Ego, greed, and arrogance. Yeah, as I said before, as CEOs, you're this unique creature, right? And you have to do all these things. And 2 weeks ago, we were 72 hours ahead of close, and we were negotiating the consulting agreement for my client. And my client says, well, I don't want a 6-page standard agreement that you would give to any other consultant. And it literally took the whole conversation off a cliff. I'm like, this could not close, right? Because all of a sudden the CFO had started talking about the problems that he's had with due diligence. All these things happened. And that's, some of that has to do probably with, hey, if I'm a CEO and I've been running my own domain for all these time, this is kind of scary, right? This is a whole new thing. Anyways, we cleaned it up, and here's what I said. I said, look, I got on a call with the CFO and CEO, and he said, yeah, they said, what is that? Like, did he really say that? I'm like, I just had a baby boy, and before we went to the hospital, my wife and we said, look, let's apologize to each other in advance, right? And so the point is that things will happen, right, during this process, and it gets intense. But if that problem had not been corrected, yeah, that deal could have fallen off the track. A lot of money, hundreds of thousands of dollars in due diligence, right? Could have been blown. So often I talk to CEOs that say, yeah, I decided to pull out of the deal like 3 days before we were going to close. Right? And so as you can hear, the whole point is that you need to figure all that stuff out way in advance and qualify your buyers. Right? So just some closing thoughts. Look, cannabis M&A, I mean, we're seeing some great activity right now. We do believe it will pick up at the same time the market's consolidating. So much is due, the legal framework in the U.S. You have this interesting situation that's happening in Canada. But generally speaking, we're bullish on where the valuations can grow. And we think the RegTech and commerce sectors should be generally good. We also are inviting cannabis companies to look outside the industry, because I do believe that there are people that will be looking for ways to get inside the industry as well. And companies always ask me, like, what can we do to prepare? And if I was a CEO of a cannabis company, I would start talking to, lay out who are the 20 or 30 companies that might be able to buy you, and start talking to them. Right? You'll learn something from them. You need to have the right advisors around you. Right? I mean, it's so important. You have to have the right legal team, right accounting team, and of course, I mean, don't try and do this alone. Right? You just simply don't know what you don't know, and I see CEOs make mistakes all the time. So as you think about, okay, what does an advisor actually do for me? Here's some numbers that I think are really interesting. 11% of the time, an actual buyer inbound solicitation results in a transaction. Think about that. So 11%. 48% of the time, that's the average improvement from the first offer with an auction process, right? How could you really know what your company is worth if you only talk to one buyer, right? How often another firm is willing to pay more? 75% of the time. Failure rate in self-managed processes, 80%. Deals involving only one bidder that are suboptimal, 100%. We see this over and over again. So, what's the message here, right? So, I mean, don't try and do this yourself, but, get multiple people around the table. Whatever you can do, right? Get multiple people around the table. So just in closing, we joke around that M&A is a lot like fishing, right? Sometimes the water's deep. Sometimes you don't catch anything for hours. Sometimes you're in a boat with somebody you don't want to be with. But we do like to take clients where we've sold their business out, either to Mexico or to Alaska, to really unplug and unwind. So hopefully one day I can take all of you fishing. So with that, I'll open it up for any questions, and I appreciate your attention. Yes?
Is this presentation available to download?
If you want, I can send it to you. If you give me your card, I'd be happy to do that. Yeah. Yeah. Yeah, so I have not sold any cannabis software companies yet. I've talked to a lot of them. I would say that most of them, it was too early, just based upon their financial profile. So in the ag tech space, we have been active there, have sold companies there. Generally speaking, if I was talking to a company in the cannabis space and I was to do a valuation on them, I would value them like I would any other company, and looking at the same metrics. So, and I think that so much will depend upon, and if you go to our website, you can see that we wrote a white paper on quality of revenue. So much of this is going to be dependent upon the actual mechanics that are in the business. I mean, yeah, the macro conditions in the cannabis space are important, but like what's really going on within the business and how revenue is recognized has a huge impact on how valuation can be derived, right? What are your KPIs? Why are you winning? Why are you losing? Are you churning customers? Right? Because it's all cash. Yeah. Yeah, no, for sure. I mean, that's one of the big issues. I mentioned that I've done some work in the space, and that was one of the big issues is the payment issue, right? And we're seeing companies like Hyper, right, that are trying to do banking and payments. But yeah, I mean, that's, I think that's, once that problem gets solved, I think it's going to have a dramatic impact on the market. So, yeah. Anything else? Great. Well, oh, yes. Yeah, that's a great question. I think there's a number of things at play there. Obviously, there's the financial data, and then there's the data that you're collecting on the consumers. And what will happen there, I think, is that some company will make an announcement that they were acquired for X times revenue, and it will catch the attention of the market. And one of the things that will come out in the press release is that, you know, they had 30,000 customers, and they knew exactly the buying patterns and buying behaviors of all those customers, and they knew how to control the inventory in such a way that the write-ups were de minimis. I'm just thinking out loud with you, right? But the point is that once examples get set on the importance of having the standardized set of data, I heard that being talked about this afternoon as well. I think that will be a driver that once people realize that my quality of data could have an impact on what I sell my business for, people will say, okay, what is the standard? Or maybe there'll be a standard organization that will come out and say, look, for you to be, you know, I don't know who that might be, but maybe it's the state of Colorado says, look, your data has to look like this, or all of the seed to sale companies have to have, you know, their product code in this absolute form, or otherwise we're not going to do Y, what that might be. Yeah. But I know I've heard that's a problem here, and so you know, and that might be a really cool business where you can take massive amounts of data and normalize it, right? And because there's companies that do that right now, and whether it's in research or other sectors, right? So.